So there are some, very interesting things that you can actually check out with strike. For example, what is the FI positioning? Note that at both these highs, you had a high reading here at the second red line over 1 lakh contracts long, which marked this top. And then more recently, we had the first line, which is around 50 to 60,000 contracts. Now, why did I mark the second line? Is there were many occasions here in the past during the 2020 rally where readings didn't go above this line. Also here in between these up and down moves. So we usually think of, multiple levels at which something can happen. And now you got this pullback. So what is the positioning now? It's minus 3,000 contracts, which means we are marginally short on FIs. Now, is that enough? Or should we really go to the low end of this range? Now, again, if you take a little bit of history, we can actually draw a horizontal line over here. So you see multiple lows at this point. This is one point, but you see there are also these interim lows, some of them occurring slightly here. So this is exactly at the point where you get slightly negative reading, like marginally short. So that happened here multiple times throughout these, small pullbacks of the 2020 rally. So this is where we are right now. But note, we also 2 days before expiration. So what happens is sometimes on the day of expiry, this position will change. Even if the market is up, it's possible that on the day one, you start with a bigger short position. So right now is not the time to look at what this positioning is. Might be the right time to look at it is on day one after expiry, which is Friday. If you look at Friday's data, after all the contracts have closed, what is the opening position that the institutions have at the start of the month? And that sort of can give you an idea of how things might turn from there. What is the sentiment? Now, we also like to look at the daily swing, a very short-term reading of sentiment. This indicator has become popular with Indiacharts insiders who subscribe and read my daily views because we publish this with the Nifty daily report every day. And what does it really mean? So it's very simple. We essentially all know that I have a proprietary momentum indicator known as the RMI or the Rohit momentum indicator. Like any momentum indicator, it moves up and down the zero line and it gives buy and sell signals. But what's important is that it does that a little early. But more than that, to actually measure sentiment, what I ended up doing is note that there are two lines, okay, in the RMI. So one is the indicator line. So let's say that is the brown line. So let me draw a brown curve. Okay, so this is the indicator itself. And then there is the moving average of that indicator. So I'll take a red line and let's put a moving average of the indicator. Okay, so now you have two lines. And what I end up doing is I measure across the entire basket of F and O stocks, which is today it's 180 stocks. The number can keep changing. So let's say F and O stocks equal to around 180 stocks. For all of them, I am essentially measuring whether the RMI, which is the brown indicator here, is falling or rising. Okay, for each and every stock, each and every 180 stocks. And then let's say 40% of them are going down or going up. Okay. So we plot that, we call that the percentage up. So 40% are going up. And that is what we plot as the daily swing. So if you go back now to the indicator, this daily swing is essentially a plot of what percentage. So it's actually reading 16 here, which means after this pullback, only 16% of the stocks are showing a rising RMI. And so this very, very short-term thing as markets gyrate up and down, the RMI swings, and we end up getting the daily swing reading, which can end up being oversold when it comes down to sub 20. And very oversold when it comes to 10 or less, So we've seen many readings recently in the last 1 year where readings close to 10, 11, 12 were all bottoms. And that's where we were like 2 days ago. And the market sort of paused here. Now we're actually trying to see whether it manages to take support there. Now, what is the average swing? So it's the same thing, but now instead of running it on the brown indicator, which is the raw indicator, we run it on the moving average, which is the red line. Remember, the red line is a 9 EMA. See, in any indicator, you always use the 9 EMA for a crossover. Even if you are using the MACD, you'll find the same thing that the 9 EMA, okay, EMA means exponential moving average, is plotted on, based of, it's a 9 EMA of the indicator itself. And whenever it crosses, we say, oh, it's a buy signal. So here now I'm measuring whether the 9 EMA itself is falling or rising. So now the EMA is slightly more smoothed. It doesn't have the jaggedness of a raw indicator, which is the whole purpose of a moving average. And that is why when you see the average swing, you find it a little more smoother than the first one. But I found, by chance that the first one, the daily swing, is good for those short-term quick moves. Sometimes it gets oversold even before the average swing. And the average swing takes a little longer, and at some points both will be oversold simultaneously, which are even stronger signals of oversold basis, which is what is sort of happening now, because the average swing is at 13. Okay, not always the case. Like even at this bottom, it's possible that the swing is down here at 20 or sub 20, but the average swing is not. You can have those kind of situations. Well, it wasn't the case here, but there will be, there will be situations either here. You'll find many more oversold readings on the average swing than on the swing itself. Okay, so that's where it gets interesting. See, like this one, at this low, just after this consolidation, we ended up getting a low reading on the swing, sub 20. It indicated that it's oversold, went up again. But on the average swing, it wouldn't have come down. Okay, so it was just here at around 30 and then went up again. So that's the difference. So I look for both. Look for single and look for both. Both are important. But if I'm doing very short-term trading, 4 to 5 days, then I think the daily swing is really relevant. And we've made it live. So earlier it used to be an end-of-day reading I used to publish in the evening. Now on Strike, it is live. So you can actually know before the market closes, where is the swing and what does it really look like. So I think the first thing you do is go to web.strike.money, try this out, and should be very, very useful for you to pick on short-term highs and lows.